Hi, I just wanted to briefly mention to you how a fixed rate loan and a variable rate loan work, because I often get asked that question. A variable rate loan, in general, is a rate that moves with the market. So when you hear about the interest rate announcements for the Reserve Bank, you'll generally hear of lenders putting their rates up or down within a few days of those announcements, assuming the rates moved. That's a variable rate, that determined by the market. Normally in a variable rate loan you can make as many and as much extra repayments as you like. You can often redraw, and depending on the lender and the package, there could be a minimum amount that you could redraw. There could be no minimum amount. Redraw is the difference between the balance that's actually owing on the loan and what the limit of the loan should be on that particular day. So if you've got a $500,000 loan and you've paid an extra $20,000 over and above the minimum repayments, that $20,000 would be what's available in redraw. So it's not from the original limit, it's from the limit as it should be on that day. Variable rate loans are traditionally much more flexible than fixed rate loans. A fixed rate loan, however, does allow you to set your interest for a specific period of time. Normally 1 year, 2 years, 3 years, 4 years, 5 years, 7 years and 10 years. Some lenders have a 15-year fixed rate. When you fix your rate, you're betting that rates in the short to medium term, however long, will not be increasing. So up to you. It could be a good idea to fix your rate if you know that you're going to have a change in circumstance and you'd like to know the exact amount of your repayments. It's also possible to have some part of your loan fixed and some part variable so that you can hedge those bets against the future rate movement. It's still allowed to make extra repayments, however can also have the fixed rate portion. And that's very important. Most lenders, when you're in a fixed rate, there's no offset and there's no ability to make additional repayments. If there is an ability to make additional repayments, it's set beforehand, and it could be $10,000 over the term of the fixed rate, it could be $20,000, it could be $5,000 a year. It very much depends on the lender, and it's very important when you're in a fixed rate that you understand that A, that's the case, that there can be early break costs, it's very important when you're in a fixed rate loan that you understand that your ability to make those extra repayments, should you come into some money, should you want to, is very, very, very limited. The other thing that might happen in a fixed rate loan is that you could have an early repayment or an early termination fee. Early termination fees for paying out a variable rate loan were taken away in around about 2007. However, with fixed rates, it's a different thing. The fixed rate is actually determined by the amount that the lender is buying and selling money at that time of fixing the rate, and there could be an economic cost to the lender if you pay that out early. That will generally happen in an environment where you fixed at a certain rate and rates have since gone down, so they're not able to make the same amount of money out of the money that they're lending you than they would have previously. Does that make sense? If not, please just feel free to email me, call me, anything. It's a big decision to fix your rate, and as I said, you can only fix for a very short, specific period of time normally. When you're fixing your rate, the lender may also offer you something called rate lock. Rate lock is a fee, a separate fee that you will pay at the time of approval or submission of your loan that allows you to lock in the rate for 30, 60, 90 days depending on the lender. So between now and the time that you're ready to settle, you would be able to lock in the rate and be assured that you can have that rate that you've applied for on the day. If you don't lock in your rate, you will get the rate as it is on the day of settlement. which could be to your advantage but might not necessarily be. Most lenders as well, most, not all, will allow you to rate lock, but then if rates have lowered in the meantime, they'll allow you to opt for the lower rate. You don't get your money back on the fee with most lenders. So that's generally the way that happens. Think carefully about fixing your rate because, as I said, there's a lot of restrictions. There can be early repayment penalties. We can be stuck in a lender that we don't want to be in, or you could be stuck on a rate that you don't want to be on anymore.